Welcome to Alpha Recap. I'm glad you could join us. Archer here with Stock Alpha AI. Today we're unpacking a market that closed largely unchanged on April 27th, but that didn't mean there wasn't a lot happening under the surface. As always, if you have questions, you can reach us at stockalpha.ai.
Thanks, Archer. Really glad to be here. The tape was subtle on the headline level, but there was plenty of rotation and some clear winners and losers once you looked sector by sector.
Let's start with the big index picture, short and sharp. How did the major benchmarks finish the day?
So, what really stands out here is that the S&P ETF finished up just under 0.2%. The tech-heavy NASDAQ ETF was essentially flat, only a few hundredths of a percent. And small caps ticked higher by about 0.2%. That's a classic narrow gains day. What that means in plain English is the averages barely moved, but that masks pockets of meaningful action. Traders pulled money out of some large growth names and redeployed it into specific themes, regulatory-driven names, energy transition plays, and some telecom winners.
Right, can you unpack what you mean by pockets of action versus a broad market move?
I mean, when you step back and look at this, breadth is the simplest way to think about it. How many stocks were up versus down? Today, the breadth was narrow. A few sectors and a handful of names carried most of the gains, while the rest of the market was more or less flat. ETF flows reinforced that. Money rotated between thematic funds rather than pushing everyone higher.
Let's talk sectors. Which groups did the heavy lifting today?
Cannabis, utilities, and communications were the headline winners. Cannabis rallied after chatter around regulatory moves and rescheduling. That triggered a re-rating in some growers and ancillary plays after months of range-bound trading. Utilities benefited from news on clean energy projects and nuclear developments, which pushed investors toward yield and long-duration infrastructure stories. Communications got a boost from a surprise subscriber result at one of the big carriers, which lifted telecom sentiment more broadly.
So cannabis, regulatory moves. Can you explain the mechanics and why that lifts stocks?
Sure. Rescheduling chatter generally refers to regulators potentially changing how cannabis is classified under federal rules. If that happens, it can open up banking access, lower compliance costs, and make the sector more investable for big institutional players. So even the hint of rescheduling can pull money back into names that had been sidelined. The market was effectively repricing that possibility, which is why you saw breadth inside the sector.
Right. And the other thing is utilities. Why did those move on what felt like a quiet macro day?
Utilities moved on news about clean energy projects and nuclear. Those kinds of stories highlight long-duration cash flows and regulatory support, which attracts investors when they want yield and stability. With uncertainty around macro data and Fed messaging, a lot of allocators leaned back into defensive, income-oriented names. Materials and mining, plus pockets of real estate, were active too. Project wrap-ups, M&A commentary, and development activity drove interest. But it was selective, not a broad reflation trade.
Now, tech was mixed. There were AI headlines and some security concerns. Any names that stood out?
Microsoft softened after commentary around the evolving partnership with OpenAI. The market was parsing partner economics and product roadmaps, which reminded everyone that even big blue-chip names can see short-term moves when strategic partnerships shift. That dynamic created winners and losers within tech, rather than a tidy, sector-wide direction.
Let's turn to individual names. Give us the quick hits from the day.
Okay, Microsoft dipped on the partnership chatter. Verizon reported surprise subscriber growth, and the stock rose, which supported the whole telecom group. Tesla had filings related to the CEO's stock holdings that grabbed headlines but didn't meaningfully change the tape. Domino's fell after its CEO warned about competitors' pricing and share pressure. Honestly, I was a bit surprised by that reaction. Hub Group and some transport names saw analyst revisions, and Lakeland Financial beat on earnings per share but missed revenue, which shows the split inside regional banks.
Verizon's surprise subscriber growth. That seemed to lift the whole telecom complex, right?
Exactly. Subscriber beats tend to be stickier news. they change the narrative about demand for legacy services, at least in the short term. And that can lift peers as analysts rerun their models.
And Domino's, you said you were surprised. Why did the market react so quickly to management's tone?
Management commentary can be a lightning rod when markets are range-bound. If a CEO hints competitors will take share through pricing, traders immediately question near-term margin and comparable store trends. So even without hard numbers, the tone alone can cause a quick downside move.
Short reactions. Right.
Right.
Yeah, that tracks.
Small market drama, big reactions.
Let's zoom out to macro and Fed implications. There weren't any big economic prints today. What did that mean for policy expectations?
With no blockbuster data, the market treated the rate outlook as essentially steady state. Analysts note the Federal Reserve remains data-dependent, so participants were waiting for firmer signs from upcoming inflation and employment releases. In short, without a clear inflation or jobs surprise, sector headlines and company-specific catalysts dominated.
So, what really stands out here is that markets were waiting for the next move from the Fed, but weren't pricing dramatic rate changes.
Exactly. The market neither aggressively priced more hikes nor priced imminent cuts. That tends to promote selective trading. Traders look for idiosyncratic stories to trade, rather than making a broad macro bet.
Can you unpack a bit about technicals and positioning? How did the tape look from a trader's perspective?
Technically, this was consolidation. The S&P's small gain suggested buyers defended dips and sellers locked profits in winners. The tech gauge finishing flat told us mega-cap leadership wasn't broadening, and small-cap participation was modest. Traders were watching advanced decline breadth, volume skew on up versus down days, and options implied volatility, all signals that the market is pricing selective risk rather than systemic stress.
Right. For listeners who might not follow those indicators, what should they look for to know whether rotation is sticking?
Look for breadth improvement, more sectors and more names moving up together. Also watch if ETFs tied to the winning themes see sustained inflows. If gains broaden from a handful of names to many, that's a signal rotation may be durable.
Quick check on volatility. Was there any sign of elevated fear, or was this calm market noise?
Volatility measures suggested selective risk. Implied vol was elevated in certain single names and sectors, but there wasn't a market-wide spike. That aligns with a narrative of headline-driven dispersion rather than a systemic risk event.
Looking ahead, what should listeners watch in the next session or two?
Earnings and corporate guidance will remain front and center. Guidance changes and margin commentary tend to ripple across sectors. Fed speakers and upcoming inflation and employment prints matter, obviously, because they can alter rate expectations. And then, watch whether cannabis and utilities can sustain leadership, or whether flows snap back into technology and growth. Geopolitical and energy headlines can also quickly change the mood.
Final quick takes. What are 3 clear takeaways from today?
1. The market closed largely unchanged, but that masked selective strength. Think narrow leadership rather than a broad rally. 2. Cannabis, utilities, and telecom were notable leaders on regulatory, infrastructure, and subscriber news catalysts. 3. The Fed narrative remained the background. Markets seemed data-dependent and cautious, so headlines and company-specific developments drove the session.
Great. One last reminder. This material is for informational purposes only. It does not constitute investment advice, and analysts' observations should not be taken as recommendations to buy, sell, or hold any security.
Right. And for anyone following this, remember that market moves in single sessions can be headline-driven. Analysts note that durable trends need breadth and follow-through.
Thanks, Kate. That wraps our recap of April 27th. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll be back after the next session to break down what moved the market.